Hey guys, the new trading week starts with yet another flush of Bitcoin's price and the rest of the market by another 10%, and it would seem, when will this end? It will never end, hahaha. Today I will show you how I plan to trade this nightmare. We've locked in your pain, and all attention is on the 8-hour TF. Bitcoin has dropped to the $85,000 level over the last 24 hours, and another batch of liquidations nearing $1 billion has been realized. The consistent decline of Bitcoin over the last 2 months is reflected on the chart as a ceaseless renewal of its local minimums on higher TFs. This November has become the worst for Bitcoin in the last 3 years, and now another low at 79,000 is in the market makers' sights. Since we are people with special needs, we continue to believe in market recovery and further growth only in the current phase. All of this is done after updating yet another local low. This time, this approach feels strange because the longs have been washed out of the market, and the sum of liquidations upon reaching 79,000 isn't actually that big. Nevertheless, as you can see from the chart, RSI is in the zone of its minimum values, while the main imbalances and liquidity clusters are in the $100,000 area. The median of the Bollinger Bands, the nearest 2-day imbalance, and a large consolidation zone are located in the region of $96,000. The Fear and Greed Index is at the 23 mark, which, although it reflects that there is panic in the market, in my opinion, even these values are understated, and the actual level of fear should be at the 10 mark, because all retail traders have simply been shaved out of the market, and the main mass of Bitcoin holders are big money. Be that as it may, the issue is not the asset price, but when and at what level the large holders bought it. The latest actual data on inflows into spot BTC ETFs show that after prolonged outflows, the asset received a small portion of positive and good days. But the last actual date is November 28th, and this week will be important for Bitcoin. As paradoxical as it may be, if outflows continue, this increases the chance for rapid price recovery. And why exactly that is, figure it out yourselves. Over the last 24 hours, there were liquidations of $640 million, of which traditionally 90% fell on the longs, who were liquidated for $567 million and only $70 million in short liquidations. The most interesting levels for liquidations right now, surprise surprise, are located above 87,000 up to 93,000. Below 85,000 there is practically nothing. We see that the main accumulation of trend short liquidity is located above the 87,000 level. The zone below acts as the nearest zone for manipulation and a subsequent bounce. On the 8th TF, the price has painted 2 imbalances, and one wants to believe that this is simply manipulation and not a continuation of the trend with an update of local minimums. Indicators showing daily lows and highs are currently in shock. The open interest indicator is in shock too. The systematic price decline from the 100,000 level is nothing other than throwing market participants into confusion. But let's be a little brave and assume what trade variance can be taken from this market. If you believe that a bounce should happen in the near future but are still afraid to open a trade, in that case the base of the 79,000 lows will be a safer option than opening from current levels. Under such a scenario, one can even try opening a short position with a limit order from the 88,000 level. But if you're a kamikaze and believe that today's flush is merely manipulation, a long from current prices is your point of power. In any case, don't forget about stops. In such a market, it is a mandatory thing, and the best days are definitely ahead.